What is up, guys? Dirk here. Today I want to take a look at the Bitcoin market, the crypto market, and just share some general update thoughts. I haven't made a video for I think about 2 weeks now, so apologies for that. I've been super busy with some other stuff. Namely, if you're not in the VIP membership yet, then I've been working on things with trading and trading the Forex markets and funded accounts. So using prop firms to be able to get funded capital and then trading with that to keep, up to 90% of the profits made with that. And that has been quite an interesting journey. Actually, if you want to learn more about that, if you're in VIP, you already have access to everything. But if you're not yet in VIP, you want to learn more, click the link in the description down below. I actually made a free training for you guys, how this stuff works. So if you're interested in that, go and check that out. Without further ado, let's dive into the charts and let me share with you my thoughts. So let's start out here with Bitcoin. It's a 4-hourly chart. Bitcoin's trading at 26,444 as I'm making this. And you can see there hasn't been much happening for the month of May. And that is pretty much to be expected. I did make videos towards the end of April saying, hey, potentially sell in May and go away. Also, we had the lunar eclipse on May the 5th earlier. And we just had a bit of a sell-off since then and just kind of been chopping around. And that is very much to be expected. In my opinion, May and June are likely just going to be corrective chop months, meaning downwards, sideways, and just creating total boredom, removing all the volatility out of the market. And that's what we've been seeing so far this month. I do expect it to still continue. And I will show you in a second on the weekly chart. I do think it's also possible that we could still drop potentially as low as 23,000. That is pretty much also my line in the sand, bear bull. If that holds, that would be then potentially an optimal long entry point for targeting upwards of 30,000 again. If we break below 23,000 with a weekly close, then things start to look a lot more bearish, and I might flip bearish, targeting potentially the lows at that point. So let's look here at what we have, and very simply you can see that since the 31,000 high, we've been making lower highs all the time, right? You can see it. This is a clear downtrend, and that hasn't yet been broken. Now, what we also have over here is we do have a bit of a horizontal support over here. So you can see it's going to be pretty crucial. We got this wick here, this wick here. If we break below here, we're probably going to go a bunch lower. And that's why I say, 23,000. You can see here, that would be below that level. There's also a nice fair value gap over here. And if you were to take the Fibonacci retracement of this entire move, you can see that would be right about 23 to 24,000 over here. And that also coincides with my line in the sand, which is the 50-week moving average. So there's a lot of confluence over here. That's why I say this is the line in the sand. If we go below here with a weekly close below 23K, things look bad. And the bullish trend is quite possibly just invalidated at that point. But until then, technically, we are still in a bullish trend. We are still above the 50-week moving average. And this can chop around here for quite a few more weeks. We also saw that in 2021, where we had the sell-off in May and June, and then towards the end of July, we recovered and started going higher. So we could be seeing that. We could be in for another potentially 2 months of chop and sideways, maybe a little bit lower. And that's why I'm saying if we do get this drop, and I think there's a decent chance we will go to 23 or 24K within the next 2 months, that could be a very, very good potential entry with a tight invalidation. So we could be looking at something like this. Of course, we'd have to see at the time how it looks, but something like this, right, where your stop is pretty much below that 0.70, and we would probably target at least probably like 34K, I think, if we do get another leg to the upside. So you can see that would be like a 1 to 8, maybe even a 1 to 10 risk reward. Very good risk reward setup. We'd obviously be looking around about that time what happens. And I'll try and make a video at the time if we get there. Obviously, I have alerts set, and I will try and look at that. That could be a really good swing trade for a potential long entry over there. Until then, this is just really, really boring, slowly grinding down. Chop. Be careful with trying to trade this unless you really know what you're doing. It's a very easy way to get chopped up if you're trading with leverage. Probably best not to look at this, and that's also, again, one of the reasons why I've been focusing more on trading Forex the last 2-3 weeks, because this is just absolute chop fest. And sure, there are potential trade setups that you can take every now and then, but it's really not the easiest trading conditions at all. Volatility is super low, liquidity is super low, and it's just difficult. So in my opinion, just patience is key here. And if you manage to preserve your capital here, then we might get a shot, like I say, at a really decent entry over here if we do get this this level over here around about 23,000. Now, just changing it to the weekly chart, here's why I say 23,000. Besides everything that I just shared for you just now, you can see over here the 50-week moving average here. It's actually at 22,000. So technically, we could stay at 22,000. We'll get a weekly close back below the 50-week moving average. Then things start to look bleak. You can see over here that was the case. As long as we were above the 50, everything was fine for the entire bull market. We closed below it, and it was pretty much bear market territory. So that means, you know, there's still potential for $4,500 drop and still be okay with the bullish trend. If it just drops there and bounces off and then continues higher, maybe say towards the end of July or maybe in August and then continues higher, keep in mind we do have the Bitcoin halving coming up in April of next year. So that's less than a year away. So the closer we get to that, obviously the bullish narrative can start to come out, maybe front run the halving rally, etc., etc. So we could see some pullback here, and like I said, around about maybe 24, 23, maybe 22,000 could be a really good swing long entry with a tight invalidation. But again, set some alerts around those levels because it's important to see how the charts are looking at the lower time frame by the time that happens to be able to get the best kind of entry, be able to put the tightest possible stop for invalidation, and then hopefully if you're right, you know, it can be 5, 8, 10R or maybe more to the upside. So that's what I'm watching, and this could literally take a couple of weeks to play out. So again, super low volatility, boring. Don't try and overtrade. Don't sit here on the 5-minute chart trying to trade every move because you are likely going to get chopped up. Again, focus on improving your skills or doing other stuff, maybe increasing your risk capital by doing other things to be able to get more fiat that you can invest into markets at those optimal times. That is kind of how I'm seeing the markets. You can see we're sitting here right on the 200-week moving average. If that drops, I'd expect a probably pretty swift drop towards the 50, right? So we go from 26, if we really break below 26, we probably go to 23 or 22 pretty fast. If that holds and consolidates around here, that would be the ideal scenario for the bullish case. Obviously, getting a weekly close below this 50-week moving average would be pretty bad for the bullish case, and we probably go back to test the lows or potentially even lower. If we're looking at Ethereum, not much has changed. We're at 1812. I'm still holding that short from almost $2,000 that I made on the channel here a couple weeks ago based on the range setup. So we have the 50-week moving average over here at about 1,526. So again, that's something similar that I'm watching. We could end up dropping in the next few weeks to that 50-week moving average. As long as the price stays above and we don't get a new weekly close below it, things are still good for the bullish condition, in my opinion. And if we get a weekly close below that, well, then we have to look at potentially targeting the lows or new lows, as this short setup would have suggested. If we zoom into the 4-hourly chart for Ethereum, you can see, again, very similar. We're just in a downward trend. We've got the high, we've got a lower high, we've got a lower high over here. So again, this is very similar to Bitcoin. We're just in a clear bearish trend until we get some sort of market structure break. So if we get above these highs, again, things start to look interesting and maybe we go back to this level again. But for now, you can see we're just trading lower, and if this level breaks down over here again, you know, we could probably go to that $1,500 level. Similar situation if you take a Fibonacci retracement and you put it over this entire move, you can see 1600 to 1660. That would also take out all these lows over here, potentially even this low. So let's see, you know, again, this would be good to set alerts, in my opinion. And if we get here, it could make for a very good swing long entry, where again, we're looking for something to the upside. Again, we'd have to look on the lower time frame. So this is just as an example. We'd set alerts and we'd look at the lower time frame when we get here, but something like this, and then potentially continuation here. And you can see again, that could be anywhere from 1 to 5, 1 to 10, maybe even more than that. So 10R potential return for a 1% risk. That is a very, very good setup for a potential swing trade. So just be patient. Again, we're at 26 May as I'm filming this. So we might still have another 4, 5, 6, 7, 8 weeks of this chop and sideways going here. And if we do get that, set some alerts, see how the charts look at the time. And again, I will try and make a video at the time when that happens, if there is some sort of setup, and try and share that with you guys. So I hope you enjoyed this update. This is just a bit of a boring period in crypto right now. And patience is going to pay off, I think, in a big way. And again, if you can preserve your risk capital and you do have risk capital available, some very good opportunities could present themselves in the next couple of weeks. And again, that could pay off very, very handsomely if that ends up playing out. So if you enjoyed this video, please smash the like button, subscribe down below. And if you want to learn more about what I'm doing with these funded accounts, with prop firms, trading Forex, and my own system, how I'm looking for 5% a month on those accounts with size, check out the link in the description down below. I made a free training. Obviously, if you're in VIP already, you have access to everything already, so no need to watch that. But if you're not yet in VIP and you want to learn what I'm doing, click the link in the description down below. Thanks for watching. I will see you in the next video.